Now, as a grade 11 accounting learner, here is a question. Have you ever wondered why the balance in your creditor's ledger does not match the one in the statement of account received from the supplier or from the creditor? Did someone make a mistake, or is something missing? Now, most of you grade 11 accounting learners, you lose more marks on creditors reconciliation. Reason being, you don't know what to compare, you don't know what to adjust, and you don't know how to identify errors. Now, in this lesson, I am going to show you exactly why the differences occur and how to identify and correct them. By the end of this video, you will be able to prepare a creditor's reconciliation statement with confidence and avoid common mistakes that cost you more marks. Hello and welcome to RMH Accounting Extra Lessons by me, the relentless Monama Humphrey the man, where accounting is made simple and your exam success is made possible. Now, before we get started, just so you know that I am going to share with you at least 7 important stuff or important aspects that you need to be aware. Number 1, I'm going to share with you what a creditor's reconciliation is. And number 2, I'm going to share with you why reconciliation is necessary. And number 3, I'm going to share with you the documents that are used for reconciling. And number 4, I am going to share with you why the differences occur. I'm going to share with you that. And number 5, I'm going to share with you the procedure with regards to reconciling the statement of account with the creditor's ledger. And number 6, I'm going to share with you the errors and omission and how to correct them. Make sense? Now let's get started with our first one. Number 1, first thing first, what is a creditor's reconciliation? Now, a creditor's reconciliation, it's a process of comparing the balance in the statement of account with that we have in our creditor's ledger. So in other words, we compare what we owe with what the supplier or the creditor says we owe them. That is the creditor's reconciliation. Number 2, why is reconciliation necessary? Why is it necessary to make or to reconcile these two sets of books? Now remember, the creditor's reconciliation is done to ensure that the balances that we owe to the supplier or the creditor matches exactly what the supplier says we owe them. So we reconcile to make sure that we pay the correct amount, not more and not less. So remember, a business should not pay a creditor without checking that the statement of account received from the supplier is actually correct. So that's why the reconciliation is necessary. That's number 2. And number 3, the document used for reconciliation. So when we make creditors reconciliation, there are documents that we look at, and that is the creditor's ledger account and the statement of account received from the creditor or the supplier. So we use these 2 documents and we compare the 2 statements. So we are comparing. As a grade 11 learner, you must know that when you start doing the reconciliation, you're going to have a statement of account received from the supplier, and also you're going to be looking at the creditor's ledger or the creditor's account in the creditor's ledger and start comparing these 2 sets of books. And number 4, why does the differences occur? Now, just as with the bank reconciliation statement, or when you do the bank reconciliation statement, so the differences found when comparing the 2 sets of books which is the statement of account received from the supplier or the creditor, and the creditor's account in the creditor's ledger, are often as a result of timing or time differences, right? Now, what exactly is time differences? So time difference, it's when the business has included the transaction after the supplier have printed out the statement of account. We call that time differences, right? That is timing differences. So that's what makes the difference to occur. And the difference occurs for many reasons, right? It occurs for many reasons, and that include the following, and I'm going to share with you at least 7 of them. Number 1, outstanding invoice. So that is an invoice that the business have not yet received from the supplier or the creditor. Reason being, it could be due to error or time different from the information we received. Number 2, outstanding credit note. So that is the credit note not yet received by our business from the creditor or from the supplier. But exactly what is a credit note? Remember a credit note. When we return stock that we bought on credit from the supplier, we issue the supplier or the creditor with a debit note, informing the supplier that, hey, your account is no longer credited. You are no longer our creditor. We are debiting your account, right? So that's why we issue the supplier or the creditor with a debit note, informing him that now his account is no longer credited, is debited. It is reduced. Now, in this case, the supplier, when during the receipt of the stock returned, the supplier will acknowledge that return, right? And then once the supplier acknowledges the return, the supplier will have to issue us with what is known as the credit note. So the credit note informs us that the supplier has now credited our account. Remember that in the supplier's books, we are his debtors. So he debited the account, and now when he issues us with a credit note, he is actually informing us that you are now credited, you're no longer our debtor. So hence, outstanding credit note. So the outstanding credit note is the credit note not yet received from the supplier. Reason being, the supplier might not have acknowledged the return of those stock, right? So that is one of the discrepancy that could cause the difference to occur, right? Outstanding credit note. Number 3, outstanding payment. That is the payment made by the business or our business, but have not yet been received by the supplier or the creditor, or the creditor have not yet been aware of, right? Number 4, discount not recorded. That is the discount not recorded due to an error, right? Or because the supplier feels or thinks that the discount is not warranted. That also could cause the differences in the two sets of books. Number 5, errors or omissions. So this could be the error made by our business or made by our supplier. Number 6, arithmetic errors. So arithmetic errors are errors that could also be done by our books, our business in our books, or by the supplier, our supplier in their books. Number 7, interest for late payment. So interest for late payment are interest charged by the supplier or the creditor, for which we have not yet, or our business have not yet been aware of that charges until receiving the statement of account. So those are the 7 aspects or things that could make the difference to occur, right? Those are what makes the difference to occur between the two sets of books. Number 5, I'm going to share with you the procedure regarding reconciling the creditor's ledger with the statement of account. That's number 5. All right. Now, the same thing, just as the way we do with the bank reconciliation statement. Once the statement of account is received from our supplier or our creditor, then the two sets of books must be compared, which is the statement of account received from the supplier or the creditor with the creditor's ledger, with the creditor's account in our creditor's ledger. So we compare the two sets of books. Now, when we do the comparison, we compare the balances shown on the statement of account with that balance that we have in our creditor's account, in our creditor's ledger. We compare the two sets of books. And in this case, we are going to check if the balance agree or they match, right? We are going to find if the balance agree or they match. So if the balances agrees, there is no need to prepare the creditor's reconciliation statement. However, it is unlikely that the two sets of books will agree. And in this case, we are going to identify the amount that differ and find out exactly which one are correct. And this will be done by following these 3 steps. Number 1, you are going to identify the amount that differ and find out which one are correct, right? Now, this is done by looking at the balance on the statement of account and compare them with the balance in our creditor's ledger account. And then if the amount correspond, we tick them off, right? You tick them. The ones that are the same or they are similar, you tick them off. Any differences that you find, you circle it, right? So you identify the amount that differ and find out exactly which one are correct between the two sets of books. From the statement of account, is the amount or the balance correct on the statement of account, or is it correct on the creditor's ledger account, right? That's what you do. Number 2, you are going to correct the errors or an omission in our books, right? Now, in this case, because the general journal will have been closed and posted to the creditor's ledger. Now, these errors will have to be corrected by means of journal entries in the general journal, right? So you're going to use the general journal to correct these errors, and thereafter you will post to the creditor's ledger, to the creditor's account in the creditor's ledger. Number 3, you are going to prepare a creditor's reconciliation. Now remember, a creditor's reconciliation lists the errors and omission that the creditor or our supplier still needs to process. A creditor's reconciliation statement normally starts with the balance as per the statement of account, and it ends with the balance as per the creditor's account in the creditor's ledger. And in this case, the creditor's reconciliation statement must balance, right? Number 4, the creditor's reconciliation statement will have to be sent to the creditor or to the supplier for correction, because everything that is in the statement, in the creditor's reconciliation statement, will have to be corrected by our supplier or our creditor, otherwise known as the creditor, right? Now, that is the procedure with regards to reconciling the two sets of books. Number 7, that lead us to the correction, the errors or omissions that can occur between these two sets of books and how to correct them you also need to know how to correct. So when you do the reconciliation procedure, you will find errors. Every time you'll be finding the error. It's either the error you'll find it in the business books, which is the creditor's account, in the creditor's ledger, or you will find it into the supplier's books, which is the statement of account, right? Now you need to know how to correct this error if found in the statement of account or if found in the creditor's account in the creditor's ledger, right? Now let's start with the discrepancies, right? And I'm going to share 7 of them and show you exactly how to correct them. When you do the creditors reconciliation, you must follow this. And by this point, after watching this video, you must make sure that you repeat watching this video. You must have a pen and paper, right? And write these notes down, because they are going to help you when you do preparation, when you do the practical application with regards to preparing the creditors reconciliation statement. Now, here are the discrepancies. This is what you need to know. Number 1, if the fault is found or the error is found in a creditor's ledger, then the error must be corrected by means of journal entries in the general journal, right? And if the same error or the error is found or the fault is found in the statement of account, then this error must be corrected by means of preparing a creditor's reconciliation statement. Number 1 error. Let's talk about the discrepancy number 1. The discrepancy number 1, or the difference number 1, we're talking about outstanding invoice. Now, with regards to outstanding invoice, if the error is done or it's found in the creditor's account in the creditor's ledger, then this error must be recorded by means of journal entry in the general journal. And this is done by debiting what was bought. You are going to debit what was bought and credit the creditor's account with the creditor's control account. And if the error is found, in the statement of account, then you are going to add the amount to the balance due. Okay, you add it to the balance due if the error was found in the statement of account. Number 2, outstanding credit note. Now, with regards to the credit note, outstanding credit note, if the error is found in our creditor's account in the creditor's ledger, then it must be corrected by means of journal entries in the general journal. And this is done by, you're going to debit the creditor's account together with the creditor's control account, and you're going to credit what was returned, because with regards to the outstanding credit note, we have returned, right? Now, if the error was found in the statement of account, then this error must be recorded in the creditor's reconciliation statement, and this is done by subtracting the amount from the balance due, right? Number 3, outstanding payment. Now, that is the a payment that have been made by the business but have not yet been received by the supplier or the creditor. Now, here's the thing. If the error is found in the creditor's ledger, then this error must be corrected by means of journal entries in the general journal. And this is done by crediting the bank and debiting the creditor's control with the creditor's account. And if this error is found in the statement of account, right? If this error is done in the creditors of account, then we are going to debit the bank and credit the creditor's control account and the creditor's account. If the error was made or was found in the creditor's ledger, okay? Now, if the error was found in the statement of account, this error must be corrected in the creditors reconciliation statement, and this is done by subtracting the amount from the balance due because we made payment. Number 4, discount not recorded. Now, if the error is found in the creditor's ledger, in the creditor's account, in the creditor's ledger, it will be corrected by means of journal entries in the general journal. And this is done by crediting interest received and debiting creditors control and the creditor's account. And if the error is found in the statement of account, it will be recorded in the Creditors Reconciliation statement. And this is done by subtracting the amount from the balance due because we received interest. All right. Number 5, errors or omission. Now, these errors or omission these errors or omission will depend on the type of error found. If the error was found in the creditor's account, in the creditor's ledger, right? But if this error is found in the statement of account, then the error will be corrected in the Creditors Reconciliation statement as follows. You are going to subtract the amount from the balance due if the business owes less than what the statement shows, or you are going to add the amount to the balance due if the business owes more than the statement shows with regards to the error, right? And number 7 or number 6, interest for late payment. Now, if the error was found with regards to interest for late payment, if the error was found in a creditor's account, in the creditor's ledger, then it will also be corrected by means of journal entry in the general journal. And this is done by, we are going, because this is outstanding, this is interest for late payment, right? Now, we are going to debit the interest on overdue account. We are going to debit the interest on overdue account, and we are going to credit the creditors control account and the creditors account, right, in our general journal, right? And if the error was found in the statement of account, if the error was found in the statement of account for late payment, okay, we are going to add the amount. We are going to add the amount from the balance sheet because it's the interest. We owe it. We owe that interest to the creditor or to the supplier. So we are going to add it to the balance sheet. Now, those are the corrections of error. This is the procedure with regards to the correction of error. It's what you're going to be dealing with when you're preparing the Creditors Reconciliation statement. So make sure you know them by head. You know them very well, right? If I can explain all these things to you, you can also know them. So make sure you know them. Don't just write notes to keep them in your books, because that notebook, you're not gonna enter it with it in your exam room. So make sure that you write your notes. After writing your notes, make sure you know everything that I explained to you by your head, so that you can apply it nicely in your exam when you start preparing the Creditors Reconciliation statement. Now, I hope I've made everything clear to you as a grade 11 accounting learner, and I hope this information that I share with you is going to help you very well. So if you like the content of this video, as I'm making this video for you, please indicate to me by giving this video a like button. And also do not forget to subscribe if you are a grade 11 accounting learner, so that you don't miss other videos that I'll be uploading. And also hit the notification bell so that every time when I upload a new video, then YouTube will notify you. And also please do not forget to share this video with other learners who might be interested in knowing more about Creditors Reconciliation. And without any waste of time, make sure you comment on the comment section below and let me know, how did this information or how did this video help you after watching this video? And by so doing, this will motivate me to make more video, because I do this video for you. Until next time, me, the relentless Monama Humphrey the man, humble and intelligent King Hannah boy, the RMH himself, and the accounting subject assassin. I will be with you in the upcoming next video. And make sure you see me in that next video. Until next time, have a wonderful accounting day. Out of here.